Welcome to the Capital Exchange. I'm Steve Wilbur, Managing Director at Allen Capital Group.
And I'm Travis Portwood, Chief Investment Officer with Allen Capital Group.
Travis, it's a big week in the financial markets. We have some industry titans like a Walmart, Microsoft, Alphabet, also known as, most people know it as Google.
Yeah, I still call it Google.
Yeah, Google. And Visa reporting this week. We have what has lately become known as the main event, though, the FOMC meeting where the Federal Reserve announces if they're going to raise interest rates and by how much.
So it is a big week, Steve. I mean, earnings and subsequent guidance given by those important companies that you talked about, along with that Fed rate announcement, helps paint a picture for the condition of our economy. So starting with Walmart, they told us this week that food inflation is taking a bite out of consumers and affecting their ability to spend on other items like general merchandise such as apparel. Walmart also told us they had loaded up on inventory of general merchandise previously or coming out of the pandemic, so now we're going to see probably aggressive markdowns over the next few quarters as they try to work those inventories down to reasonable levels. Google, Alphabet, whatever you want to call it, said that they're slowing down on hiring as ad spending by companies has declined due to lower engagement by users. So why are users not as engaged on the web? Well, that moves us over to Visa's report, where they show us that consumer spending, while strong, has shifted away from goods and web-based services to expenditures like travel. Cross-border travel was up 30%, according to Visa.
Lot,
yeah. So the reopening for consumers moving from online purchases of things to experiences, it's in full effect right now.
Yeah, Travis, earnings are a mixed bag so far. So let's move on to the Fed leading up to this meeting this week. Speculation was we were expecting a 75 basis point or 0.75% increase in the Fed funds rate, or possibly a 1% increase as it continues to try to battle this inflation problem that we have. Well, Powell, he didn't surprise anyone. He came out with a 0.75% rate hike, and now the Fed funds rate is right around 2.25 to right at 2.5.
Yeah, Stephen, following that hike, Powell said he doesn't think we're in a recession due to the strong, labor market consistently adding jobs month over month. Even though this morning the Bureau of Economic Activity came out telling us that the economy had contracted for the second straight quarter at a negative 0.9% on an annualized basis. That number will be revised, so stay tuned on that. But Powell also acknowledged the signs of economic softening with spending and production pulling back a bit, and he did say it may be appropriate to slow the pace of future rate hikes moving forward, and that future hikes will be data dependent.
and Travis, the stock market loved that last sentence, and it rallied Wednesday in response to a slower pace of increases moving forward. Yields on bonds dipped as well, and so that popped the bond market. So overall, Wednesday was a really good day.
Yeah, Stephen, we obviously like advances in markets. After all, that's why we invest. However, questions remain as inflation continues to hang at those 40-year highs. The Treasury yield curve remains inverted, and that's where those short-term rates are higher than the longer-term rates. And an inverted yield curve is generally a precursor to a recession, even though we don't know when.
Which we've talked about.
Right, we've talked about that in previous videos. So we'll take the good days when we can get them. You don't want to miss the good days, but expect market volatility to persist as investors digest data as it comes out, and we continue to work through, the issues we face.
So true, Travis. This has been great. I look forward to it next week.
Look forward to it as well.